Hi, everybody. My name is John D'Agostino. We only have 35 minutes. Let's just dive right in. I'll let the panelists introduce themselves. David, we'll start with you.
Certainly. Thank you very much for being here this afternoon. My name is David Tawill. I am the president of ProChain Capital, which is a 3-month-old blockchain-focused hedge fund. I've been in the hedge fund business for close to a decade now. I've been managing for the past 9 years an event-driven, distressed, turnaround-focused fund. About 18 months ago, got very intrigued about blockchain and crypto. Partnered up with a PhD from Stanford, gentleman, extremely bright, spent 6 years in fintech, blockchain, crypto, and we have a multi-strategy approach to the blockchain space. We're trading large cap tokens with long bias. We also have some systematic trading on an agnostic basis with respect to tokens. We're trading equity, both long and short, of fintech-focused and blockchain-focused companies. And then lastly, we have a portion of the portfolio that is devoted to illiquid or venture-like investments in blockchain-focused businesses. Effectively, what it boils down to is I've been involved in a lot of asset classes over the course of my career. As a matter of fact, I started my career as a lawyer. I was a bankruptcy and restructuring lawyer. I worked at Credit Suisse on the sell side for a number of years, ran proprietary trading strategies there as well. And in seeing asset classes emerge...
David, I don't mean to interrupt, we just want to get the intros
My
first
apologies.
before... I should have been more clear. Mike, your 2-sentence introduction.
Yeah, I'll make it short. Mike McGlone, Bloomberg Intelligence. I want to thank Beryl Elites for having me. I'm a commodity and crypto strategist.
Lawrence?
Hi, I'm Larry Newhook. I am the CEO of 2 firms. One is Alpha Innovations, which is really it's a managed account platform that we're building out right now, mix of fiat and non-fiat trading strategies, as well as we also have a sister company, Laureate Digital Securities, that's really focused on the issuance and administration and secondary market trading of funds issued as digital securities. Prior to that, I spent 12 years at Steve Cohen's .72 SAC Capital. Before that, I headed up the hedge fund program for a large Canadian pension fund.
Great. Okay, so, and the reason I'm here is I serve on the board of ProChain, and I lecture occasionally at MIT. So that apparently gives me the right to speak on virtually anything. So I'm going to channel my inner Nouriel Roubini for the purposes of being the only one to provide some balance to this optimistic world. So the title of the panel is Crypto and Blockchain Hype, and I think we could devolve into a kind of meaningless argument around whether or not scalability is going to be solved or not. But I thought what might be more interesting instead is, since each of you approach this sector from a different perspective, we ask a simple question, and which is, in the next 3 to 5 years, so short term, how will retail engage differently with blockchain and crypto? And you're free to say they won't, it'll be institutional, and then give your view on that. And we'll use that as a launching pad for hopefully, which will be some questions. So I'm going to start with Mike.
Okay. The main thing I focus on is the outlook for the market and the cryptocurrency market in general. And I can really see this is not a focused cryptocurrency event because there's a lot of dark suits on. There's actually some ties. So I enjoyed going to a lot of these events.
It's Crypto 2.0.
There we go. We're going institutional. But I enjoy going to these events because I'm a markets guy. And my job at Bloomberg is to point out this is where the market's going with, and why, help investors make the decision. If they want to do the opposite, McGlone says, I get it. But all the indicators I have for over a year now says the market must go lower. I'm going to be publishing my Bloomberg Crypto Outlook this week. I do it every month, but then I write stuff during the month, and the things like everything I see in supply, demand, and price, volume, velocity, Bitcoin addresses used, supply, just the total amount of cryptos, network value to transaction ratio, all these things, anything I can find on the blockchain, any data I can find that has a robust history and intuitive and makes sense that it has a correlation with where the prices should go, all point lower. The problem I have in that space is when you're a strategist and you call a bull market, everybody loves you. But when you point out the peak and you ride it down and you keep saying the same thing and it keeps doing the same thing, people hate you, which I'm used to, which is fine, but I got to call it the way I see it.
How does artificially controlled supply or limited supply cause for lower prices?
That's a key thing. What's the big story this week? Bitcoin Cash is forking. So we're going to instantly get a double of the total supply of Bitcoin Cash. When people say there's limited supply, it's a complete fallacy. There's 2,000 or so tradable cryptocurrencies right now. 2009, there was one. Bitcoin is only supposed to be 21 million. If it was limited, why is there Bitcoin Cash? Why is there Bitcoin Lite? Why is there Litecoin? Why is there Bitcoin Diamond? It's a complete fallacy, this supply limitation. Now, Bitcoin, yes, as the original version, like potentially Netscape or AOL, has limited supply, but that's the story this week. Is just another fork means additional supply. And I have a simple rule about supply and demand in commodities and any type of markets. The supply is unlimited still, yet prices have reached the inflection point where it's mattering. I used to trade treasuries a lot, and supply helped drive a bull market, but now it's the opposite. So to me, I don't see an end to that yet.
Okay. David, to you. Feel free to respond or to just give your view of a 3 to 5 year outlook for how retail engages in blockchain.
I'll give quick answers to both.
Go ahead, please.
So 5 years from now, I don't think 3, but 5, I think it'll be intertwined in people's lives to a point where they don't even notice or recognize it. Kind of like the internet. When I was in college, I had a friend who was a geek, and he was playing chess on the internet with someone in Kentucky. I didn't understand why, I didn't understand the value, and lo and behold, years later, it's now intertwined in my life far beyond the inner workings of what he understood the internet to be and what value he found. With respect to the comment that was made, that was about supply. I'd like to talk about demand. The demand side of the equation is, I think, ramping up. I have meetings with investors. I'm blown away, honestly, by the sophistication that exists out on the investor side, institutional endowments, foundations, and even high net worth and ultra high net worth individuals, family offices, how much some people who have not yet even committed $1 to the space know about the space and appreciate the breakthroughs that can happen from the technology. And therefore, I think that we will see a good amount of demand coming on. It may not go into all the flavors of coins that currently exist. Some days those may become obsolete, but yet I think there is going to be a point where that demand is going to be very important.
I can't dispute that. I mean, in the sense of it's the first viral financial meme that we've ever seen as a society. So it's I got a call from the Wall Street Journal when the SIBO launched their futures contract, and because I used to be head of strategy for the NYMEX, they said, so how do you feel about this? And my response was, of course they launched this futures contract. We would spend all of our time marketing futures. This is marketed for them. It would be a disservice to shareholders if they didn't. But my question to you is, I hear this argument all the time. I hear, well, only X% of people have a Bitcoin wallet or own Bitcoin, and if 2% of the world's population buys it, it'll be worth X. But can't that argument be made for literally every company or product ever sold since the history of time? Every body creating some widget nobody wants says, well, look, if only 2% of the world's population buys this, I'll be a billionaire. So how do you think about it? Why will 2% or 5% or 10% of the world's population feel it necessary to hold digital assets?
Because they need it. I was just at
for what?
For
store of value?
Yeah, let's start with that, because that I think is most simplest way to think about it. In South America, where I separate and apart from ProChain, I have an investment in an Argentine oil and gas company. And I spend some time down in Argentina, and not necessarily in Buenos Aires, some of the further reaches of Argentina, where there is no banking system, where lots of people have money and they don't know what to do with it, they don't know where to put it. And this enables them to go ahead and do something with it, have easy transactional value, protection, and more importantly, protection from governments where they face serious inflation concerns on a daily basis. So I do think that there are valid cases for the use of this technology in a very, very simple form. Will that form necessarily resonate with people here in the United States that have easy access to those types of services, and we all have bank accounts, so on and so forth? No, I think it's going to take a different form. And just last point on that. I think it's really, I know this sounds like a broken record, but I really feel that it's really early days in the asset class, and it still needs to evolve. Will there be a watershed event, or will it be adoption happen over time? I don't know, but there are so many brilliant minds that are surrounding this, and there can be very valid arguments made for the value that is proposed by the technology.
Okay. Lawrence, strong argument for store of value / digital gold. I know you're working on tokenizing LP interest and GP interest, so I want to talk about how that'll work and why it will work.
Sure. Just a couple comments on my view of Bitcoin. I have no idea where Bitcoin's going, so hats off to you for making a bold prediction. With respect to retail participation, I definitely believe that EM is going to lead developed markets in the uptake of cryptocurrencies.
So what will lead?
Emerging markets will
Okay.
lead developed markets because the use case is that much stronger. You have folks that don't have banking, that this gives them a means to access banking. With what we're doing is I'm dealing primarily with institutional investors. So for me, I mentioned at the outset that I used to run the hedge fund program at a large pension fund. So one of the use cases for the technology, I really don't care about where Ethereum goes or Bitcoin goes. What I'm interested in mostly is the technology. What can blockchain do for my investors? Now, your initial question was, well, what's retail going to do? I don't know about that, but where I do think that retail investors are going to be impacted by blockchain technology is through a lot of the cost benefits that can accrue through the use of blockchain technologies. So think of a lot of the fees that get embedded in fund returns, administration, audit fees, etc. There are administration solutions that are being proposed, that are being implemented now, utilizing blockchain technology that can dramatically streamline those processes, and the hope, and remains to be seen if this happens, those costs should be passed down to the investors, including the institutions, the retail, et cetera, and that.
So let's talk about that. So on cost. So full disclosure, I'm on the advisory board for a security token exchange, one of the big ones they're launching this year, and I'm on the board of directors of a regulated, because most exchanges are not actually real exchanges, they're marketplaces, but an actual regulated exchange here in the US for Bitcoin. The cost is that I understand of a security token offering will be less than, say, a Reg A offering, but not that much less. We're not talking 25% of that cost, we're talking 60 to 70%. So where are these? So you're asking an entrepreneur who can list with traditional mechanism to list in a brand new mechanism with unproven liquidity for a 25% discount. Is that, are the costs going to go down? Is that sufficient given the other benefits of it? So where is the real significant cost savings coming from?
Sure. I think what we're seeing is that this is a new industry. A year ago, the cost to tokenize anything was extraordinary. The costs have come down a lot just in the past few months. We've gone through this process of partnering up with technology firms to help us on, and I hate the word tokenization because what we're doing is we're issuing digital securities on a real underlying asset. These are our investment funds. There's nothing token about what we're doing. What we're doing is we're securitizing something and recording it on a blockchain. That's all, quote, tokenization is. So we're definitely seeing costs come down a lot. Now, the exchanges that are up and running, again, mostly on the utility token side, the cost of listing are very high, okay? What's going to happen is that over time, you're going to see things like listing costs, transaction costs on the exchanges reverting or emerging or approaching what we see in the fiat world. Eventually, that process will take some time to come, but we will see some cost advantages. So for an entrepreneur, either you do it, if assuming you're looking at your options are doing an IPO versus a ICO. And again, we're talking about securities here. The cost difference already is huge. To do an ICO, and for us, be it you can ICO a fund if you want. There's funds that trade on exchanges. good luck with that process. It'll take you a tremendous amount of time and a lot more expense than doing it via security token offering.
So before we get to Mike, so where will liquidity come from? Because there's been attempts at doing this before. There's been attempts at fractionalizing GP shares, doing Reg A compliant online issuances. I was involved with one for PIMCO. You would think with that brand name, there would be people lining up to buy GP shares. Crickets. So where is this? I see all this energy being put into these new models, but in my experience of building liquid pools, if you have a shitty product, decreasing the friction of selling that shitty product doesn't make people want to buy that shitty product. You actually need really good products. So where is that good product going to come from? If I have the ability to market right now, easily. If I'm one of those few people that can go out and sell, and my brand name, my performance allows it, why would I take a risk at this new venue for capital formation? Well,
that's interesting because there's a lot of venues out there, and some of them even have the motto that they want to tokenize the world, which I think is crazy. Not everything is meant to be tokenized or issued as digital securities, and that. What we're looking to do is build a marketplace for high quality funds issued as digital securities. So I agree. If you have a venue with all kinds of crap on it, it doesn't matter if it's if you're trying to create a market via via traditional investments or via digital securities. It doesn't matter. I agree with you. They're not going to trade, but when you do decrease the friction, though, it allows more market participants to play in. So things like, you think of some of the the hedge fund players, the quant funds. If they have a marketplace where they can buy and sell with not very much friction and low cost, they can participate.
Okay, Mike. All fundamental signals point down. Diamonds, artificially constrained supply. There's no shortage of diamonds in the world, yet that market has maintained price stability for a long time and trades fairly liquid. So why not bigger? I have a 5-year-old daughter. The notion that she will hit my age and there won't be a digital store of value is as crazy to me as some of the stuff I'm seeing now in the blockchain space. So why won't that happen?
Well, that I'm not saying won't happen. For instance, I just came back from London. A month ago, I was in Hong Kong, and I used that credit card for everything. But the thought that person in between, or that entity in between, gets 3 to 4% of any transaction, to me is obnoxious. 10 years from now, if I can't use some form of crypto, and I'll say cryptocurrency, I'll be very disappointed. And this is why I want to bring in David, what you mentioned earlier. What I see, first of all, I have to look at it as a markets guy, a strategist. Where's it going and why? The key thing that's missing in this space is it's not there. What I'm going to do is I'll write my outlook for cryptocurrencies, and I have to define it. These are not cryptocurrencies defined that we know what currencies are. These are speculative digital assets dominated by retail investors speculating. And that's what I see. I think it's transitioning to institution. I mean, Bloomberg, I helped spearhead the Bloomberg Galaxy Crypto Index with Mike Novogratz in Galaxy. And Mike keeps saying institutions are coming, just like you said, David. I believe that, but I got to see it in the data. I got to see it in volume, in velocity, in addresses used, and maybe something's different. Anything that gives me an indication it's happening, yes, I can't wait to go out and say it's finally bottomed. But if you look at the history of Bitcoin, when I tell people the truth, it should bottom around 1,400, they get upset and say, well, here's what it did last time. Guess what that is? That's a continuous mean. Guess what the low was? The continuous mean. So you just pointed all these indicators. We just gone too far. The technology has to keep up this speculation. Every indication I have is still this bear market is in early days.
David, what are the innovations? Respond, and then also, what are the innovations that will finally move? I gave a presentation to about 40 university endowments. We wrote a white paper on investing in crypto. I asked them to start out with who here is seriously looking at it. Who here is looking at it? 40 hands go up. Who here is seriously looking at it? 35 hands go down. Of the 5 left over, do you think you'll make an allocation in the next year? All hands go down. What will change in the next 3 years that'll shift those numbers to investors?
So I think some of those things have already started, and they're boring. So first of all, the lack of volatility over the last couple of months is critical. I think it's flushing out.
It's the right trend.
It's flushing out a lot of speculators. It's flushing out a lot of retail. It's flushing out a lot of, by the way, very important that we didn't talk, about early days, nefarious users. All those things need to go away. I think that that's what's happening right now. Obviously, I'm not particularly heartened by the fact that volume has dropped to something really low.
Well, on exchange volume, right? OTC
Correct.
volumes have continued to grow.
Well, if you also check blockchain transactions too, they're all equivalent to price when Bitcoin was last around $2,000.
The next boring piece, I think, is the regulatory and legal and compliance framework, which is now, it's coming together. Larger institutional names are getting into the custody part of the business, the administrative part of the business. I'm not saying it's a panacea, but on the other hand, it is helpful. It helps give these institutional investors comfort.
For a limited number of assets, though, right? So Fidelity's not going to be custodying shitcoin ICO. They're going to be
your winners
so
and losers accordingly.
Okay.
Pick your winners and losers accordingly. In other words, if someone were to tell me, look, I have a portfolio of quote-unquote crypto, and I've got 60% of my portfolio in Bitcoin, that's actually a sound thesis to me, right? There is good reason to have 60% of your portfolio in Bitcoin.
In all fairness, most TMT hedge funds made all their money on 4 stocks over the last 10 years. So
exactly.
That seems unfair to criticize concentrated crypto guys.
So I think those things, the boring things are happening. I think the boring things are the things that are going to help. The next kind of wave upward, and I'm talking about big wave upward, I think is about adoption. And, I'm not the marketing genius. I don't know what's going to catch on and immediately go viral, but it's going to be about adoption. I'm not talking about institutional adoption of the asset class. I'm talking about adoption of using this technology, using coins, using whatever it is that is going to go amongst beyond a broad population.
I'm glad you mentioned that. One of my favorite questions to ask panels like this is, I agree with you, and I think it will probably be the lowest common denominator use case, because as a species we're fairly lowbrow. We invent the internet and we trade adult images and cat videos before we actually do something important with it. So I met a gentleman from Zynga, the gaming company, who's now in blockchain, and his goal is he thinks the earliest use case for scalable blockchain will be gamified, basically like online gambling and esports, which is huge, and betting. I'll throw that same question out. Anyone who wants to take it. What is that first scalable retail use case for blockchain? And you give it a shot. Throw out a.
Well, can I just follow up on what David said? To me, the ideal thing for Bitcoin is digital gold. And you're in Venezuela, you're in Turkey, you're in China. Push a button, you can diversify your assets. You don't have to use physical gold. Amen. It's about time we have a global currency. I think it's happening, but it can't trade with annualized volatility of 100%. It needs to be like gold. Annualized volatility is 10%. So I think that's where we're going, and there should be a handful that will succeed at that.
Let me challenge you on that. I think you can't have extreme volatility, but the other stores of wealth used. So we're talking about individuals who are in deteriorating economies, or individuals who live in parts of the world where the government can kick down your door and take your stuff.
The majority of the world who doesn't have this. Right. Maybe we have a handful of currencies that are really.
If I'm at risk of hyperinflation or someone breaking down my door and seizing my assets, do I really care about that volatility? This is a last. If I need to put it on that jump drive, swallow it, and flee the country, do I care if the vol's 20, 30%?
No.
Yeah. Right, I don't.
You don't in the short term?
It's the last use case
It's
scenario.
about ease of use.
The high-end art market in 2008 had as much volatility as the stock market.
But you don't in the short term, but for it to work in the long term as a global digital currency, which I think we're talking about here, maybe a handful, you need to you need to continue what we're doing right now. What's the trend this year? Volatility is declining, it's still way too high, and there's a proliferation towards stable coins. The problem is they're focused on the dollar, which is not the best right now in currency without a liability is gold, something like gold.
David, what do you think of stable coins? Lawrence, I'm sorry, you next. What do you think of stable coins?
What do I think about stable coins?
What do you think of stable coins?
I have a hard time finding the use case for them, quite frankly. There's how many are there out there now? There's hundreds.
The main one's Tether.
The main one's Tether, and that, which is kind of
for
questionable. For now, we'll see. We'll see about that. But one of the things I wanted to get to was, and it's kind of brought up a little bit, was the institutional adoption of crypto. Right? Do I think that pension funds are going to be speculating in Bitcoin and Ethereum anytime soon. No. Where I do think that they will be participating is via digital securities of various kinds. So you can talk about, a real estate that's been, issued as digital securities or any kind of asset like that. I do, and I used to work for a pension fund, and what I learned from that experience was that the biggest risk pension funds mitigate is career risk. So they're not going to be at the leading edge of investing in new assets, and that, especially an asset class that, quite frankly, up until recently, it's got a little bit of hair on it. Okay, a lot of people that I've worked with in the investment industry, they still equate blockchain to cryptocurrencies to bad guys. Okay, that is evolving. Okay, but pension funds, it's going to be a while. But where they are going to be, but given that the use case of securities issued as digital assets is so compelling, they eventually will come. That even that's going to take some time.
All right, where's my time guy? I think we started late, so we got 5 minutes? 5? Okay, great. David, if we can, and then we'll maybe take 1 or 2. Anybody have questions? Or we'll just let David speak for the rest. We do have questions? All right. Well, David's going to go, and then you get your question. You're the first question. Okay, ask it now. That's fine. Mm-hmm. Ooh, that's a good one. David, you want to take that, or cede and you'll get the last word?
I'll pass.
Mike? As a former accountant, maybe, but to me that was the key thing that really turned me very bearish this year. And having experiences being in the 80s in the Board of Trade, 26-year-olds making a lot of money, not paying their taxes. And right now it is property, and people need to realize anybody make one transaction, Ethereum to Litecoin to Bitcoin, any type of transaction is a taxable event. Every time you spend that, that's a taxable event. And these people didn't get that, and I think that's just still kicking. As far as switching from property, I think it's unlikely they would change that.
I'll give my quick anecdote around, will governments ever accept a non-government controlled currency that's a threat to its existing currency? I was speaking in Malaysia to the Securities Commission there, and the Sultan and the President and the Prime Minister of Malaysia were there, surrounded by the army. Men with guns, huge guns. And a gentleman from a very popular blockchain firm was speaking before me, and he said, and I quote, "It doesn't matter what the regulators or governments do, you can't stop it." Yeah. And I remember just looking at him and looking at the 9 AK-47s, looking back and going, no, actually, I'm pretty sure there's a bunch of people in this room who can stop it. So I think this, if people thought that about online poker, and then in I think it was 1999 or whatever, people woke up with guns at their head and now tried playing online poker today. So no, I think the answer is no. They will not accept it. But David.
Maybe Larry has one.
No, I'm good on that.
All right. I actually want to respond to Larry's points regarding securities. So I come from the securities world, used to work at Credit Suisse. I think the Wall Street lobby is extremely powerful and extremely resistant to change for lots of different reasons. When we focus on investments in companies that are using blockchain, to us it's about volume. It's about what do we do every day in our lives that can benefit massively from blockchain. We're looking at very old line businesses like property title, transfer, and so on, with respect to how we have insurance policies, so on. I know there's lots of people attacking these things from lots of different ways. There's got to be 20, 30, 40 initiatives on each one of these points. But to go ahead and attack an old line business that is going to be super disrupted by this, and there's really not as strong of a lobby as there is in the securities business, to me is an easier play in terms of adoption than there is in the securities business.
Uber broke local municipalities laws, local municipal laws, right? So it was allowed to break those laws because it was difficult. Nobody really cared. Airbnb, same thing. I couldn't agree with you more. All right, maybe one last question, then we got to go. Any more questions? Right there.
You talk a lot about securities tokens. What about utility tokens and where they're going and what you see coming out of that?
I mean, so I'll just say quickly, because I speak with the SEC fairly regularly, there is no such thing in the U.S. as utility token. Like, it is absolutely clear. I mean, Chairman Clayton could not have been more clear. I know everybody in the industry tries to grasp on to any comment, but as far as the U.S. is concerned, that's just a concept that doesn't exist. But I'll let other people speak to it.
I pass.
Pass, okay. Yeah,
I definitely agree.
Yeah.
Yeah.
I mean, so non-US, maybe, we'll see. I'll say this, if we have a truly decentralized company, if that concept actually exists, because right now they're all BS, they're not decentralized, that will fundamentally change everything. Corporate securities laws have to be rethought. Even the SEC acknowledges this. Everything shifts. But until then, it's just not a thing. All right, we're getting pulled off. Thanks, everybody. Thank you.